Next panel we have is the venture landscape in DeFi. Our moderator will be Mable from Multicoin, along with Santiago from ParaFi, Mike from Framework, Haseeb from Dragonfly, and Meltem from CoinShares.
Hey, Imran.
Hey, Haseeb, how are you?
I'm good. I'm good.
Awesome. Let me ping the crew. There we are. Hi, Mabel. Hi, Meltem.
Hey.
Hey,
Hi.
guys. Good to see you both.
Yeah, likewise.
We'll give the mic to you, Mabel.
Mabel, are you in China?
Yes, it's late here.
I noticed that. Damn, it's late there. Okay.
Is that just 3 of us, or are we expecting more people?
No, Santi's coming. He was in the green room with me, so I think he's joining.
Yeah, Michael's in the green room too.
Okay.
There he is. Hey, Michael.
Hey. Let's just give another minute for Santiago. But before, I guess for everyone to introduce themselves, I guess I can introduce myself first. Hi, everyone. My name is Mable Jiang. I'm a partner at Multicoin Capital. I sit in China. Our team actually is a thesis-driven investment firm. We invest in both public and private markets. We have a pretty decentralized team in China, Hangzhou, Shanghai, and then also in New York and Austin. So I'd like to hand it over to Meltem to kick off the introduction, and then I'll pass along.
Thanks, Mabel. Thanks for doing this so late your time. I'm Meltem Demirors. I'm at CoinShares. I run the investment team there. We're a publicly listed digital asset investment firm. We have asset management products, $5 billion in AUM across 4 different platforms, a trading business that's very active and now active in the DeFi space. And then I lead our investments through both the venture fund and principal investments we make with our balance sheet. So excited to be here.
Thank you. And then Haseeb.
I'm Haseeb Qureshi. I'm managing partner at Dragonfly Capital. We're a global crypto firm. We invest generally early stage in pretty much everything crypto. And I'm excited to be here.
Santiago.
Hey, everyone. Santiago, my partner at ParaFi. We focus almost exclusively on DeFi. I've been investing in crypto since 2012, and yeah, excited to be here.
Thank you. And Michael.
Hey, co-founder of Framework Ventures. We are also venture investors, primarily in DeFi, and we actively participate and trade through the Framework Ventures program.
Thanks. So let's head into the first question. So lately, we've seen quite a bit of institutional capital coming into the space. So how do you see the crypto market structure is different from that of the traditional equity investment, and how does that impact your emphasis in your investment process? Let's give it a reversal. Let's start with Michael.
Sure. So I think one of the big differences that we've found as part of the education process with institutions is what is a token versus what is equity. The traditional venture landscape for fundraising is seed, Series A, Series B, et cetera. That just doesn't exist very much in the private fundraising landscape for crypto projects. Thinking about what is a token, how does it accrue value, what's the valuation model for that, all other kind of big questions. But it's part of the education process.
Cool. And you want to go next, Santiago?
Yeah, just to add to that, I think the other component is the path to liquidity. A lot of, these are tokens that are very liquid markets. Most people and institutions that we talk to are quite surprised when in traditional venture you have a path towards a lot of these startups like Uber and Facebooks of the world, take 10, 12 plus years to go public. In crypto, that's not the case. These tokens are quite liquid, and these markets have pretty decent liquid markets. And so that's probably one of the hardest things when you're investing in this space. It's a mix of venture and hedge funds because you have liquidity. And so sometimes holding these assets can be and managing that risk can be one of the most difficult things when you try to adopt like a long-term thesis while also managing risk.
If I can just follow up on that, sorry, Haseeb, I'm going to just jump in and dovetail off what Santi said. I think the challenge for us is, so we're trading on average, $10 to $20 billion a quarter. For us, the challenge is like we're always mindful of position sizing, because even though these markets are very liquid, the venues where a lot of these assets trade, like they don't integrate with traditional venues or trading systems easily. Different types of orders are challenging to place. Developing even a risk mitigation strategy or risk management strategy in size is really challenging. And then in some instances, for some of the newer tokens, it's even difficult to access them through a regulated venue or a fiat trade pair. So we're always really mindful when we're engaging in these markets of just some of the challenges of integrating market structure into our electronic trading systems. And we're talking to a lot of FIC desks on the institutional side around technology and infrastructure that they can be utilizing. We're investors as well in not only DeFi protocols, but also the underlying infrastructure that's going to be needed to connect crypto market plumbing, which is very different to traditional market plumbing, and some of the unique market microstructure considerations I think are a topic that comes up a lot and can be pretty daunting. Like even, if you have a shop that codes in C++ or Rust, then switching to Solidity and just trying to make sense of how you're going to put the plumbing together is a big challenge. So just to dovetail off Santi, I think it's a big mindset shift, totally different market, totally different structure, totally different contracts. So there is a pretty steep learning curve. And I think that's why all of us are sort of specialists in this area, because it does require a really nuanced and specific skill set, infrastructure, policies, practices, et cetera.
Another big difference in market structure, if you look at traditional equity investors, very often when they're investing in the private markets, they're hoping to get something like 15 to 20% ownership in a single investment round. And that kind of ownership target is just a non-starter in crypto. Generally speaking, there's no major protocol where a single party owns 15 to 20%. Otherwise, they almost immediately get mobbed as being a VC coin or being too centralized. And of course, a large part of what makes these networks valuable is that they are decentralized, is that there is no single party that owns enough of the token supply to be able to control the direction in which that protocol moves or is governed. And in fact, for many funds, they've come to realize that we actually really don't want that. We don't want to be in a position that we own 15 to 20% of this token supply, because from a regulatory perspective, we may be perceived as being part of the operators or controllers of this protocol. And so you're seeing more and more actually crypto investors starting to understand this concept of, we really want to make sure that our ownership level is low enough that we're not put in any kind of position that we have explicit stewardship over the governance of one protocol or another. We're just participants alongside other participants in this decentralized ecosystem. And traditional equity investors, whenever they get into crypto, first question is, can I get 20%? Can I get 25%? The answer is no. The answer is, if you're asking that, you're asking, you're already in the wrong mindset to be doing crypto investing.
Yeah, I'd echo that actually. I think governance and liquidity profile are something that I think a lot of the traditional venture investor wouldn't have a deep thought around, versus like I think in crypto, obviously people think a lot about that, even when you're making venture investment. So heading towards the next question, all of you guys are more or less thesis-driven investment firms. So over the course of the past 2 years, what are some of your evolving theses? And then what beliefs got enhanced and reinforced? Let's start with Meltem first.
Yeah, for us, it's really simple. We follow the 3Ds framework. So we believe that capital markets are fundamentally going to change due to the 3Ds. That's digitization, driverless banks, and changes in financial product distribution. Everything is becoming an asset, and all of those assets are going to trade 24/7, 365 on public open networks driven by open source software. That's the thesis. It's a big idea, and obviously it's being applied in different places. I think the one area where I've been surprised and have sort of evolved the thesis is I did not anticipate how quickly the DeFi market would evolve and how much participation we would see, and how much I've always felt that crypto was bigger than fintech, and fintech was sort of a subsector of crypto more broadly. But I think crypto is just completely consuming everything in the fintech space. I firmly believe in the future, every company will be a crypto company in some regard. They just don't know it yet. That I've been really pleasantly surprised at how quickly we've seen crypto adoption happening. And in particular, like how quickly the abstraction of the underlying DeFi protocols and the crypto components has happened. So there's companies like Outlet that are offering high yield checking accounts and savings savings accounts using DeFi and crypto rails on the back end, but the end user isn't exposed to any of that. And I think we're seeing more and more of that. USDC rolled out their yield API, which I think is huge in a zero rate environment. Blockfolio, I think yesterday announced they're offering 5% on all deposits into accounts on their platform. So I think just the rate at which crypto is consuming capital markets and how quickly that's proliferating into the consumer side of finance as well as the institutional side has been astonishing, exciting. It's difficult to keep track of it. And I feel like I just ride a wave of chaos and I'm trying to stay on top of the wave, but there's a lot of stuff you end up being surprised by because no one person or firm can track it all.
Yeah.
And Haseeb,
just to add to that. Oh,
actually,
never mind.
go ahead.
Go ahead, Santi.
Go ahead.
Yeah, I was just going to dovetail. I mean, that's a great point, Meltem. Like, I generally think that, like, if this cycle, I think will go down as, I don't know if we're in a bear market or not, but I think, like, the key insight for us that I've seen, or especially pronounced, like, the last 9 months is, you know, I think, like, a lot of investors historically have just thought of crypto as one asset class. This just gets Bitcoin and then some in alts. I think more and more people awake to this idea that Bitcoin is interesting, but there's this whole component of Ethereum and Web3, which is much, much, much larger than Bitcoin. Like, you're talking about the internet, and there's much more capital that is willing to deploy in tech than there is to hedge macro, which, by the way, we don't even know if Bitcoin's a really good hedge anyways. So I think, like, most investors now in this space are coming to crypto because they're interested, to Meltem's point around, this is the next arc of innovation of the internet. This is a true, fulfills the core component that the internet never saw, which is a money layer. Like, for the first time ever, you're able to move capital at the speed of information. It's disrupting not only, you know, financial markets, but also the way that we think about ownership, and we think about generally, like, you know, NFTs and what's happening there. So I think, like, that's super powerful. I think people are waking up to that idea. And DeFi and Web3 can be much, much larger than gold. And, like, if Bitcoin ever converges on that 8 trillion or so.
Haseeb, do you want to go next?
Sure, I'll go next. So I think from our perspective, so what I often hate when VCs, or I hate when I am asked the question of what thesis do we have for crypto, because overwhelmingly I find that when I stake my ground on, like, okay, this is the thesis for this fund, crypto then goes and changes and some crazy thing happens, and then it's like, oh shit, now it's metaverse, now it's NFTs, now it's this thing. And almost always, I've learned over time that being thesis-driven in the traditional sense is incredibly unwise, when I think the principal job of a crypto investor is just to pay attention to what's happening and to try to keep up with the different directions in which crypto is evolving and entrepreneurs are innovating. So overwhelmingly, I think, you know, 2 years from now, probably most of the things that we're saying now on stage, like by the time we're still in the deployment cycle for our funds, the things that we care about and things that we realize are the big problems that need to get solved, or the place where value is getting created, are going to be in a completely different direction from where we started looking. So, you know, there was no way I could have anticipated NBA Top Shots or the massive growth in NFTs. You know, things like Polygon and Binance Smart Chain. I had no idea anything like that was going to happen. And more often I find myself humbled by the fact that it's incredibly difficult to predict where crypto is going. But the one thing you can do is to be very, very disciplined in changing your mind quickly. So that's the perspective that I've come to take over time.
So just to close this out, I fully agree with everything that everyone has said. I think the one thing that we've doubled down on in our perspective is just the power of the token as a mechanism for coordination and incentivization. And I think that is an overarching factor when you have an open source network and an open community that's governed by decentralization. You can have a token that is the focal point of that community. So that's one of the things that we've learned. I think from what Santiago was talking about is the transition from DeFi to maybe Web3. One thing that we've doubled down on is just the concept of speculation meeting entertainment as a new form factor for consumer product. I think that's what Top Shot is. I think that's what a lot of the social tokens are. You know, that's something that we've kind of had in the back of our minds. It's something that we think would be coming, but I think 2021 showed that it's actually here.
Cool, very interesting. I guess, like, one more point I'd like to add is that anything that could have new human behaviors can potentially bring on new economic models, even if you don't see how it monetized for now. And often that like we'll figure out like come true later on. So we'll come to our last question, since a lot of our audience is actually from traditional finance. So what are some of the areas you guys see high potential for the institutions with larger amount of capital to be involved? I guess we can start with Santi.
Santi, did you catch the question?
Santi's looking thoughtful.
Yeah, he's processing the question.
I think my internet's really crappy here in Paris.
Okay. No worries.
Did you call me out, Mable?
No. Did you get the question? Should I repeat it? Oh, I think he's frozen or something.
Yeah, the Parisian internet.
Can you guys hear me or no?
Haseeb, you should start.
We can't hear you.
Okay. How about I kick it off? Santi can cue off everyone else about what we're talking about.
Yeah, you guys take it.
Yeah, sounds good. So, there he goes. So where can traditional players with much more capital get involved? I think there are obviously two sides. So most of the innovation that's going on in the private markets and in the very early stage tokens, there isn't the liquidity for, if you're trying to deploy, $500 million or $1 billion in crypto, there are relatively few assets that can absorb that kind of liquidity today. There's some assets in the top 5. Obviously, the vast majority of institutional capital thus far has gone into 2 assets, which is Bitcoin and Ethereum. I expect that to continue for a while. It's pretty difficult to underwrite a lot of the tokens that are farther down the list, past 4 or 5 on CoinMarketCap. Overwhelmingly, where we're seeing a lot of these traditional investors start to get in is in some of the late stage equity investments in crypto. So, you saw just the other day the FTX round, which I think it was $900 million that they raised from, Sequoia, from SoftBank, and a number of other players. And we're starting to see more traditional investors get involved, like Tiger, like DST, these players who can actually put, $100 million, $200 million slugs to work. Most of that is going to happen in the late stage ventures or pre-IPO investing. And I expect that to continue for a while until some of the risk profile of these, more technologically complicated investments starts to go down and these things become more and more de-risked. But right now it feels to me like the appetite for traditional investors getting into some of the more esoteric investments that traditionally are in the purview of crypto native VCs like the people on this panel, I think that's going to take a while.
I can add to that. I think the really interesting trend, historically, venture investors have been the ones to sort of capitalize on these innovations. I think because so much of what's happening in crypto is tied to capital markets, I actually think it's trading firms who are going to reshape the world as we know it. Jump trading, DRW, some of these prop shops in the US and abroad have really been like the movers and shakers of the crypto world, even looking at FTX that came out of a trading firm. So I actually think that people who deeply understand, study, and spend time thinking about market microstructure and how to build systems are going to be the big winners here. And I do think we're going to see more participation from firms who have unique and tangible value to offer. Right now, there's a lot of capital in the space. It's really hard to get into deals, and firms are, companies and projects are looking for very specific value add. I do think we're going to start to see bifurcation in the space where some firms will build credibility by participating in governance. Others will become just generalist sort of platform funds like Andreessen has done. And then I think the firms that will really thrive and benefit are those that spend a lot of time thinking about trading market microstructure and how to utilize that to connect basically crypto plumbing with TradFi plumbing and build that 24/7, 365 global, open, internet-driven market that we all envision. So I'll be controversial, and as a trading firm, I'll say I think the trading firms are going to be the big winners here because they have the DNA to sort of figure out how to build in this space.
Yeah,
Mable, sorry, go ahead.
I was just saying, like, I think like it really changes the landscape a bit. Like, it's very competitive sphere. Like, it's hard to a lot of times, like, you're competing against the community and you have to be super mindful of that. And like to I think it was Haseeb's point, like you don't really want to own a big percent of the network. So look, I mean, a lot of these funds are raising a lot of capital. I'm not sure if you're going to be deploying them in a sensible manner. It's just important to like just stay disciplined. We like to stay in our lane. We don't pretend to do anything other than DeFi, and that's what we do. And so, you know, I think like if you look at historically venture asset class, like the returns have come down, hedge funds have come down. I think, you know, unclear if you're going to be able to deploy $2.5 billion in venture opportunities without like paying up. But I think if you look at historically, some of the best venture funds like Benchmark have stayed disciplined around like a $200 million size, and they don't move from there. So, I mean, I don't know if that's going to be the case. I think I am seeing a lot of fraud in these markets of just people going in there and just leaping into a project 100 million that has no product, no idea. And like, to me, it's just important for everyone to stay disciplined, because ultimately, you know, it's super important for us to like, you know, you don't want to raise any at 100 million and then 2 years down the road without a product, then do a down route at 20. It's so demoralizing. And so I'm just going to call it out because it needs to do it. I know it's exciting. I know crypto is an XR innovation. Look, we're all here super bullish, but let's just like, you know, let's not make the same mistakes as 2017.